And now moving on to the panel discussion. Here with us today are two very experienced panelists well versed with this topic. The first panelist is Mr. Mohamed Hussain Maniku. He is the CEO and the board director at the Capital Market Development Authority. Next on the panelist is Dr. Fazeel Najeeb. Dr. Fazeel Najeeb is an assistant professor at the Maldives National University and the co-founder and co-editor of Maldives Economic Review. The moderator of this panel is Mr. Mohamed Haleem. Ladies and gentlemen, I believe you need no further introduction of Mr. Mohamed Haleem. So without further ado, panelists, kindly please join us on stage.
Thank you, Dr. Fazeel, and thank you, CEO Maniku. Welcome to the panel. And my first question is, I would like to ask from Dr. Fazeel. And now we know 90% of the financial sector is coming from our banking finance. My question is, we have a non-financial sector, but only 10% is coming from that sector. So do you think this is a high time for the policymakers to find a way to improve the sources of finance from non-bank financial sector?
Thank you very much for the question. But first of all, thank you to CA Maldives for giving me this opportunity to be a panelist here today. It's really a pleasure to be here with the company of so many professionals. I haven't seen this many professionals except in maybe international conferences and international meetings organized by the World Bank and IMF and these institutions. So this is really remarkable. I would like to congratulate CA Maldives for this. Yeah, so I think the time has been ripe for a very long time for non-bank financial services to come into the mainstream. We know that we have so many difficulties in terms of compliance to bank regulations, MMA regulations, and most of which I would say are by necessity. But for a small country, for a small developing country like ours, we could really do with a more mainstreamed industry of non-bank financial services. Having said that, I think we also have to acknowledge, looking back, over the last several decades, I think we have done remarkably well in terms of our development. We must not forget that. We didn't do things the best way, the ideal way, but we managed. So as a result, I think most of the participants here would know that the World Bank, even today, takes Maldives an example of development success. We had all these difficulties in the financial sector, in borrowing. Nevertheless, we've done well. So the question is, can we even accelerate our development if we had a more robust non-bank financial institutions industry? Yes, we do. So the question, how we go about bringing this mainstreaming is the question. I think here the Capital Market Development Authority has a huge responsibility, and I think Mr. Maniku will allude to the challenges that he faces and also the initiatives that they are taking. As things currently are, I think the NBFIs are playing a minor role. So I think there is tremendous potential. The key thing for me is, I think, while regulating, we sometimes tend to over-regulate. Regulators, when they sit around a table, perhaps they get carried away. And so I think for me, the main thing is to have a real balance in terms of providing an enabling environment for NBFIs to make their money, because no firm is coming forward unless there is a great incentive for them in it. And then also from the other side, the people who are using these services, for them also, I think this, the impact of regulation, the so-called shoe leather cost, should be at the optimal. There is inevitably some cost involved, definitely, of compliance. But over-regulation, I think that is what we have to be very careful of. So I think for now, I'll stop here and let Mr. Maniku also add to what I have said.
Dr. Fazeel, before Manik, okay. Because we have SMEs and other companies trying to access finance for some of the very feasible and lucrative or viable projects. But they are unable to get that funds from the banking sector. So, and we know 90% of the financial market is dominated by the bank. So don't you think we have a way out to support those SMEs to access the finance for those projects?
I think SMEs is a key sector in the development of any economy, and particularly for a developing country like ours. So I think yes, and perhaps this is the recognition that the government has in recent years got right, and there is in place an institution that provides finance to SMEs. But again, the question is what I said earlier in terms of the costs. Is it worth it? Given the existing market structure, SDFC provides lower cost finance to SMEs. There's no doubt about it. But after you apply for a credit facility from the SME, how long do they take? My personal experience is this, and I was unfortunate to be involved in a project that was not for myself, to be involved in a project that the application went in just before the advent of COVID. And it took about more than a year for this to be approved. It was really frustrating. And I think it is also the same for SMEs. Even if they go into a bank, they take forever. And this is something I think the regulatory authorities, the firms themselves, the banks themselves, and the NBFIs as well, I think, should take it into account. I have come across experiences where you, as a small business person, you apply for a loan today, and you get your approval tomorrow. That's the kind of service that we would like when, for example, NBFIs come into more mainstream, and also existing banks at the same time. So I get your point. We need more SMEs to come. We need SMEs to grow faster and better and be more resilient in disaster situations like the COVID. Many of the SMEs closed down or laid off their workers for a while, and I think this is not only true for us. And I think the key is resilience. So we, the regulatory, I'm not in the regulatory area anymore, but I think the regulatory authorities should take this in account. At the same time, I think the policymakers also need to press the regulatory authorities that some of your regulations are really cumbersome. They are costly to doing business. Every day is an opportunity cost for the business. So I think as a policy, the government must emphasize on this.
Thank you. CEO Manik, CMDA is mandated by law not only to regulate the capital market, but also to create a fair market with some products as well. So could you please tell us some recent developments in the capital market in terms of helping the companies to raise finance?
Thank you, Haleem. Thank you, Haleem. Yeah, let me just start with the same sentiments, Dr. Fazeel. So let me again start by endorsing Dr. Fazeel's sentiments about the CA Forum and their invitation to have me here as a panelist. I'm grateful that you invited CMDA to represent here, and Haleem, I think, for moderating in this session. The question that is that what are the recent trends that has happened here? Now, as you know, Haleem has given a good presentation of where CMDA is placed in terms of the what you call regulatory frameworks within the financial sector, the bank being one and the CMDA being the other. Now, what we have seen is that the alternative financing concept has so far not existed at all. It's the traditional banks, and alternative financing is also has the banks being there. So capital market has not really been there for the people to explore as a opportunity of what you call getting finance. So what we have recently done in the past few months, what the CMDA and MSC has done is basically launch a Vienna platform. It is a private securities framework under which the private companies can list for debt. Now, it's not an equity platform. Equity platform has been there as a public offer regime in capital markets in 2006. It's been taken up by few companies. But I personally see this is not enough, so it will come out as discussion goes forward. I think the public sector has done relatively okay, but I think for the private sector, this Vienna platform is essential. Now, as far as the Vienna platform goes, it's an opportunity for the medium and small businesses. Even now, they can list for debt. Now, they don't have to go to the bank. Forget about the banks, and I think Ismail Hamid was there. I would just tell him, dump the banks and come to us. Why would you go for 13% interest and try to borrow a securitized loan while you have a business concept that you can develop in the market and come and borrow from the capital market? This is something they can do even now. I would certainly, me from the capital market and others who help me out, and I'm sure the stock exchange is the same, we are willing to go ahead and do this. Now, just to give an explanation of what has happened is this, they have already registered 80 potential investors have already registered in the scheme. But there is a need for investee companies or funds to register in the platform itself for people who are interested in the, investing. Now, it's the individuals that we have basically looked at are basically a little bit of professional investors who has incomes over 300,000 a year or so, not the general public as such. But we have limitations that is clearly established in the platform. And there are advisors who can advise anybody who is coming. We have licensed advisors. So please take the advice of the licensed advisor in terms of coming down here. That we are going to basically help it out. And the other thing that Dr. Fazeel has just mentioned, it struck me, is that we can't over-regulate. Now, we know we are in the infant stage of development. So what we have currently as a regulation is insufficient to cater for the, what you call the brands of today's, what you call activities that are happening here. So we have to make something happen in the market. And for that to happen, as regulators, we should be willing to be more flexible in terms of accommodating these things. And in fact, we are basically, our technical committee and the board is basically in agreement to look into any possible ventures that may come our way. Haleem has suggested green bonds. Now, there is ESG reporting. So these are things that we have not been prepared for in a limited way in our capital market. But certainly, we are ready to go into and do this thing. So my message is very positive. So there is an alternative financing concept for anybody who is interested in. Don't go and try to borrow from the banks at 13%. Anything above 2%, certainly, why not? Why do you want to keep your deposits at 2% while you can invest in the market for 7 or 8% for the investor, for the people who have a little money there? And anybody who is looking for project financing, why borrow at 13%? There is a way to do this at the capital market side. So that's the practical aspect of what I have to say.
Thank you, Manik. It's a good news. Before my next question, can you raise the hand if you know about the Vienna portal before this session? So this is a good awareness session as well. Thank you for the information. Dr. Fazeel, given the practice by other countries in terms of alternative financing options, in your opinion, what are the best financing alternatives here in Maldives for us? Please try to be more specific with examples, if any.
Yeah, thank you for that question. I think it is really difficult to beforehand say this is the best because every country is unique. So we cannot borrow something from somewhere else and install it, so to say. Even if we install, if we use that word, we have to have certain criteria. It's just like when you install a software, right? Your hardware has to have certain amount of, random access memory, hard disk, and whatnot. So I think the key is customization. I think there is no one-size-fits-all solution anywhere in the world. So I think when we look at other countries, there are ideas that we can borrow and then bring them in and customize. Invariably, in most of the countries, I think alternative financing includes, such ideas as, for example, Maniku was mentioning, and you also mentioned, I don't think you, green bonds, yeah. For me, I think for Maldives, this is a key segment of the financial sector, bonds. I know for a fact that CMDA long time ago did a study on how corporate bonds could be introduced in the Maldives. At the time, there was a study, and the conclusion was the legal environment was not sufficient. But look, if we wait for everything to be there before we start something, we will never have anything. You know the old story of the Maldives. The person who came to study the introduction of tourism in Maldives said the existing situation is not right for introduction of tourism in the Maldives. This was history, right? Look where we are. We are the best in the world. So if we wait for everything to come into place and then start something, perhaps we will never start. So the key for me is go and start. And as Maniku mentioned, when and where necessary, regulations are needed, we come in with regulations, but optimal regulation, not over-regulation. We think, when we wear the hats of bureaucrats, we think the more bureaucracy we introduce, the better we are. For me, it's the opposite. Let the private sector wheels rotate, right? Then the economy starts to work. As a result, more money is generated. As a result, the money is invested somewhere else or goes to somebody else's pockets. In turn, they start spending. The whole economy is stimulated. So I think regulation has to be there, but we cannot wait for regulations. If there are bold investors or bold entrepreneurs in the private sector, I think you should come forward and take a risk. Just like the pioneers of the tourism did. So it's all about risk-taking when the private sector is concerned. But for me, and you talked about the other countries, examples from other countries. We have many countries where there's a robust sector, SME sector, that are greatly helped by angel investors. Do we have any angel investors here? Meaning, if we say this in Divehi, the term might not translate very properly, so I'm not going to use that term in Divehi. So I think the idea here is that an investor who has his own saving is willing to invest in your company. But you have to have already demonstrated that you have done some business and then you are so and so profitable. If it is a startup, probably angel investors will not be very willing. Somebody might, but generally this is how it is. So if you have your own business, then if there are angel investors, then there is this opportunity. But in other countries, there is a link between the angel investors and the existing entrepreneurs who need financing. And the link sometimes is provided by institutions such as a great media or an association, where the association or the media outlet works to collect a bunch of angel investors, right? Give them the idea, this is our program, this is how we are going to do. At the same time, announce it to the SME sector all along so that SME sector is able to apply for these opportunities, in these opportunities. And then they come face to face with the angel investors. So this kind of links, I don't see here. Perhaps this is something that, again, either a private association or the government could start. And then there is, for example, the crowdfunding. I see a lot of crowdfunding here in the Maldives, but not for entrepreneurship. It's for somebody's medical, well and good, you know, it's okay. And sometimes people raise $1 million, $2 million, right? $2 million is a lot of money for a small and medium enterprise. And I think if this can be proactively done by somebody, you know, there is this opportunity. For me, though, the key thing is not the angel investors, but that's a good initiative for somebody to take, I think. Not also crowdfunding. I think for me, the key is facilitating bond issuance. Why? Because this is a direct link between those who have funds. I'm not talking about a personal investor who has $1 million rupiah. I'm talking about corporations that have funds, excess funds, and I'm pleased to see that a new initiative has been taken in the Maldives in the form of the First National. You know, and this is something really exciting for me as somebody who was involved in the financial sector for a number of years. We need more initiatives like this so that, you know, the corporations who have a large amount of money needing to be invested somewhere instead of just getting the sitting idly either or getting a meager percent or two through some deposit, you know. Let it be active. When it becomes active, then the chances are that the circulation of the money in the economy is greater. So I think while we look at the alternative forms of financing, we cannot also forget the tremendous role that the banks play. Given the existing situation, and you alluded to this fact that there is a lot of liquidity in our system. And this is most demonstrated by the fact that we all know, the fact that there's a lot of rupiah chasing dollars. We have dollars, we do, but they are hidden somewhere so that there is, you know, an artificial or maybe natural markup on the existing rate. So in a way, you could say that is I'm talking about the black market. When I was at the central bank, I didn't allow myself to say black market. I always said parallel market, but look, it's the same, right? So maybe this is the correct rate. You know, if it is the correct rate, and if what is happening, there is transactions going on, right? But not at the official rate. The transactions at the official rate are limited. So the key is there is liquidity. As of the end of 2021, the outstanding loans amounted to something like around 30 billion rupiah, I think. The deposits, just under 50 billion. So there is a margin there that indicates the availability of liquidity. On top of it, we also have the MMA financial soundness indicators indicate that actually the capital adequacy ratio required by the regulation is, shout at me if there is an MMA person here and if I'm wrong, is around 12% or 15%, right? But our industry capital adequacy ratio is how much? 46%. What does that tell us? That tells us the distance between 15 and 46 is the amount of funds available for investing in banks. Now, if banks aren't willing to invest this to SMEs, then banks would naturally go to you know, the least risk borrower. In our case, it is the government. They know that in any case, the government will pay. So I think in order for this to take place ideally, we have to put our house in order also. And that should begin with the government's own house, financial house, being put in order. The biggest financing market is the international money market. There is no question about it. The amount of funds flowing around the world is phenomenal. So a lot of funds are available for us to also borrow. But because our houses are not in order, the rate at which they are willing to lend us the government is very high. So that is the bottom line. So if you go to a private sector party, say in Dubai or Singapore or somewhere else, the first question they would ask is, what is your sovereign rating? And I would say, I have nothing to do with sovereign rating. I'm borrowing privately. But they want to look at the macroeconomy. How well is the macroeconomy doing? The oversized budget deficit indicates that the macroeconomy is in imbalance. That is a great indicator for any investor, any lender, any creditor, anywhere in the world. So the starting point is, I think, putting our house in order, and then coming down. There is also the question of our own, now I'm talking about the SME sector itself, our own practices. And for me, it has been disappointing. And I have shared this story with some of my friends here. And it is disappointing in the sense I myself did a lot of work in order to raise X amount of finance for a particular parties. And then after I have done all that, they would at the end of the day say, not day, maybe a month, maybe 2 months, say, okay, we have found somewhere else, or we have decided, we are not going forward. Okay, that's their decision, fine. In another case, we found the funds, they were willing, but they needed something. What did they need? They needed the borrower's financials, audited financials. Who is going to lend you money if you are not willing to show your financials? And it has to be audited, right? And at this time, okay, they held back. Okay, we can't share the financials. So I don't know to what extent this practice prevails. I'm assuming now you have to have your finances somewhat in order, if not in the best order, because you are required to declare with the, commissioner is here, so, so I'm thinking that this is something that you now must do, even if not ideally. But I think it's not one small thing. I think it's a whole lot of things that needs to happen simultaneously before we get there. But for me, if anybody is out there, let's not wait, let's start. Let the government chase us with their regulations, which is what the governments do all the time. They're always behind. The private sector always finds ways to be ahead of the curve, so to speak, in terms of regulation. I think this is what needs to happen. I see a lot of energetic entrepreneurs in our economy, in our country, and I think, if there is a push, I think if there is a push, these entrepreneurs, investors could be more active, and I think we could see more financing available also, I think.
Thank you, Fazeel. When we talk about alternative financing, in the context of some other countries where they have developed capital markets, I think they consider alternative financing in addition to normal mainstream bank finance and the mainstream capital market. But in our case, the mainstream capital market is also an alternative finance for us because of limited transactions and the room for improvement in our capital market. So it's very important to develop our capital market, as Dr. Fazeel has mentioned. Mr. Manik, so if we are to develop our capital market and also some other securities, what are the major challenges that you are facing right now to develop the securities market in the Maldives?
Yeah, it's a good question, and in the sense that I think the first one I would basically the challenge limit to the institution itself, because basically capital market I previously mentioned that as an alternative financing mechanism has never been considered in that sense. It has been traditionally the banking. So we have to make aware the concept is available in the first place to people who are out there to find alternative financing, like boating association, like small businesses. And we talk about so many resorts have been awarded and not been able to finance funding. So as far as the CMDA or the regulator is concerned, I mean, the opportunity exists here. We have a public market as well as a private platform where we can basically entertain this. But depending on the amount of the project at hand, I would conquer that, I mean, not 150 million cannot be raised or may be difficult to raise at this moment in the capital market. But certainly, small to medium enterprises financing can be raised. So I think we have to do from our side a lot of what you call marketing and build trust on the capital market side as it. So for that to happen, I have again something that might be a little bit more controversial, because what is happening here in the market is hardly any trade happens. The listed companies are there, and they, many of them listed company shareholders are people who have bought the shares and holding their shares for dividends. So there is no trade happening, nothing happens in the market. So many people don't see anything happening here. So for countries like ours in the initial stage of development, I think it is a must that the government take the lead in terms of making their development happen. So what do I mean by saying this one? Now we have Mr. Asim, the Privatization Board chair, also with us. We have the vice chair. But what I'm trying to say here is the liquidity that is currently in the market is not enough. We obviously know that. So how do we, as a challenge, convince a private entrepreneur to come and list it when it traditionally has been able to get finances from the banks? Now, if you take 4 or 5 what you call tourism-related companies here, they are family-owned businesses. They have all the accesses in the world to get their own financing, and they have never come here. Why? Because they get their own finances from banks. They don't need to come here. Whether it is 13% or 14%, and because the industry is so profitable, you get your bank, you get your finances, and you do your own thing. So what we have here is something that is a challenge. Is I think we have to basically liquidate the market, build trust for people to come and list with us, and then maybe things can happen. And then I would basically, what you call upon the concerned stakeholders to make that liquidation in the capital market happen. Now, we have heard of privatization program that has been announced by the government, and then I think this discussion is going to be there at a later stage. I won't go into that one, but certainly the privatization program, if it is directed towards the capital market side in terms of liquidation and empowering the people. When I say empowering the people, I think the capital market is the only way we can uplift the public, middle and lower class people to own something. Now, we have seen today the minister or in the tourism discussion that has happened. Now, 70% of the employee salaries, for example, goes to the higher, what you call salaried people. Now, if you take that category, I'm very certain much of those people are expatriates, not the locals. So how do you share the nation's wealth with the public? That's a question that I think anybody would ask. So what I'm saying from the capital market side is help us to liquidate the market so that people can be lifted. So there is a policy that needs to be adopted by the stakeholders to make that deliberate attempt at policy to make this happen. Now, the most evident thing that we see is that capital market side, for example, there is a foreign company as insurance industry. Now, there is a bigger company that is locally operating and not in the market side at all. Now, there is so many industries, resorts that are happening here, and none in the market side. When I say this, I know it's MTDC is there, but MTDC has been what you call faulty from the beginning. But that wealth has not been there as the government envisaged. I know when the tourism law came into being, there is an incentive for people to take on issuance of public shares to the what you call, when there is a what you call lease rights that takes into 50 and 99 years incentives. But what has happened? It hasn't taken up. It has been taken up because they have bought into the rights. So they pay a certain fee to the government and buy that right. So nothing has come to the capital market side or the people side. So this is something that is concerning me, and I'm basically not a policy man, but I'm certainly what you call application, I would, what you call the action-oriented person. So this is why I say I can't say it properly in the language that you may, but this is something there. But maybe in search of what you call doing the right thing, I'm changing the bee, and then I might end up what you call knocking the elephant, the what you call rhino, and the bull altogether, from what I'm saying here. But certainly you need to chase that bee. The Auditor General, I think, in his speech, it's a moral question on our part not to sit and be satisfied with the status quo. It's the, what is the word here is rethink. So let's rethink, but rethinking alone is not enough. Act on it. This is what I'm saying. Let's act on the rethinking part and do some policy changes that makes this happen. Thank you. Thank you, Ali.
Thank you, Manik. So you are talking about the willingness of the government and also about the, I believe you are referring to some companies in some SOEs. When they change some of their policies, then it will be helpful for Capital Market Development Authority to increase the level of activity, and ultimately it will be beneficial for the people. Is it?
Yeah, that's exactly what in terms of reporting, for example, there are state-owned, a lot of state-owned companies. I was made to understand there were over 30 state-owned enterprises. We know not every state-owned enterprise is ready to be on the capital market side and for people to invest. Now, but certainly there are companies in the state sector that can easily come to the market and be what you call propagating the concept, be that one. There is already ready-made companies that, lot of companies that has assets worth billions, in fact. So why not give a small, in terms of transparency and the accountability that you require of these companies, I think that is a proactive step that we need to take right now. Let's take that step. So big companies are there, insurance companies, it's difficult to name names, but certainly you know what I mean. So those are the things that need to come here, and companies need not come only for capital. I know these companies may not need capital, but there is another governance aspect that is required. So if you run state-owned companies as private companies, this is not the best thing to do. So run these companies as public interest companies. People who have, they certainly have interest in those companies, and let them report. So how many, for example, do we have seen all the, what you call, annual reports of companies who are big companies? I have not. Who is responsible to bring up the corporatization aspect of the what you call corporatizing is basically reporting and what you call directors' responsibility to come out with annual reports and things like. So we can start from there at least. This is what I'm saying towards the gearing of coming of companies to the capital market side. The natural history of companies is that you start small, build your business with family money, borrow money, then come out and be a public company. That's what it is, right? Life history of companies are those. So let's go, take that stand and move. That's my suggestion.
Thank you, Manik. Due to time limitation, I think it's important to have a question from audience as well, given the topic that we are discussing. So any questions from the audience, please? Any questions towards capital market or about the topic that we are discussing? Okay. If we don't have a question, Dr. Fazeel, could you please have your final concluding remarks on this?
Thank you. I think first of all, this is a very good initiative by the CA Maldives. So I would like to once again reiterate the importance of events like this. I think not only by CA, but also in other, by other institutions in the country, particularly at the regulatory level and professional level, to organize events like this. Because being informed and getting information is key for, it's a large part of any country's development. We need proper information. And even for developments to take place, like the stock exchange, I think information is key. One of my observations as far as the stock exchange is concerned is that it still needs to make the trading even more friendlier. And so that, you know, what we want is more trades to take place, right? So it should be very easy. We have seen in other countries, I personally invested in a foreign stock exchange, and it was very, very easy. The first time you had to go in and you had to do all the signatures, fine, that's it. Then you have your own, their application, you sign in at any time when the market is open, you see live trading taking place, prices changing, you want to invest in any of the shares, you just click, and you quote a price, you wait for it to happen, and then 5 minutes, 10 minutes, 15 minutes, if you are lucky, if your strategy was right in pricing, then you either buy it or your shares are sold. It's very easy. You could do it anytime. So I think we need to get there. Perhaps, you know, we need to invest more in technology, so things like that. But for more pertinent to this event also, I think it is really key for every one of us to keep in mind that we should not wait for anybody to come and do everything, lay our bed, pillow and everything, perfume, and then we lie down. No, no. We do things, and be it in the private sector. For the government, I think there is an added responsibility of making sure that things happen. And I think if we in the sense that the regulator just makes a regulation and just, you know, waits for things to happen, I don't think it will ever get happened. I think if, for example, the opportunity is there for private investors, private companies to come and list in the Maldives Stock Exchange, I think now we have about 3 or 4 maximum private sector firms. I think 3 or 4. I think, you know, stock exchange has been there forever, but we only have 3 or 4. Why is that? We need to go out to the public, have a plan, go to the sector, go to the companies, have a schedule, say why not invest, what are your problems, what are your fears, and educate themselves and inform them that there is this opportunity. It is a much cheaper form of investment because it is, you become a shareholder, you put your capital at 100% risk. If the company goes down, the company loses nothing, the investor loses everything. You know, it's a very efficient way of financing. I think this kind of information needs to go out there. And for the tourism sector, I think you alluded to it. I think for the tourism sector, most of the well-established companies might not have really the need to list now. But I think if they are not dormant, they also need to grow and redevelop. And for that, they might need some additional capital as well. So I think there is a need to convince them also. I had the privilege of interviewing for Maldives Economic Review. The privilege of interviewing 2 very eminent gentlemen from the tourism sector, and their view was they are willing to list, but they were saying there were certain limitations. They wouldn't name, but you know, they were also considering listing somewhere else, maybe in Singapore or somewhere else where there is a lot of liquidity, not in terms of the speed within which your trade takes place, but in terms of the money, the amount of money that is there for investment. I think so. I think for me, these kind of forums are really, really helpful, but I also think the stock exchange, both stock exchange and CMDA needs to go out there, go to the stakeholders, the players, the small firm, the medium firm, the large firm, go there. Why aren't you investing? There is so much cheap money. Why aren't you considering? And I think that is important.
If quickly, because
yeah.
time is up.
Agree completely with Fazeel in what he's just summarized. So basically what we are saying here is capital market side. For a regulator to regulate something, there has to be something, right? So we have to basically work, like you said, in terms of going out and getting our presence felt, and in terms of private sector participation, government sector participation, and the regulatory regime itself to make the facilitation happen. So other than that, I have been on the other fintech from the exchange side. I think there is a consensus that we have realized that that is also a very stumbling block that we have here, and I'm assured that MSC is working towards that one, so the trades might happen. What you call the IT solutions will happen at the end of 2003. So that is a target. They have basically come out and publicly said that this is going to happen. So that work is also going on. So that's something that we can assure the public in terms of going forward from CMDA side.
Thank you very much for your insightful contribution. Thank you very much.
Panelists, could you please remain on stage? We'd like to award you with a token of appreciation. Yeah, you too. I'd like to request on stage Mr. Fatullah Jamil, Commissioner General of Taxation and CA Council member, to give away the token of appreciation. Mr. Fatullah Jamil. Mr. Mohamed Hussain Manik. Dr. Fazeel Najeeb, and Mr. Mohamed Haleem.